Hello everyone, welcome to today's video. This is the continuation of actually one of the videos that we did just recently, that is about the preparation of comparative and common size statements. So in that video, while we were solving the sum or while we were discussing about the sum, I told that there are two ways that we can do comparison, or comparative statements can be drawn in two ways. One is comparative balance sheet and one is comparative statement of profit or loss. Those who are wondering what is statement of profit or loss, it is the other name of profit and loss account when it comes to companies. Similarly, there is one more set of statements that we can prepare that is also used for comparison only. So all these are used for financial statement analysis. So to analyze the financial statements, we can use many tools. So comparative statements are one of such tools. Common size statements are also one of such tools, and cash flow and ratios, accounting ratios are also some of the tools that we can use for analyzing the financial statements. Today we are going to discuss about, out of all these tools, we are discussing about common size statements. Okay, common size statements. What is common size statement? In the previous video we have discussed about comparative statement. What is comparative statement? Comparative statement means there will be two additional columns in each financial statements. You can prepare comparative balance sheet, or you can prepare comparative statement of profit or loss. Whatever statement it is, you will add two more columns, amount columns, to the right side when you are drawing, and you will name it as absolute change and percentage change. When it comes to comparative statements, absolute change and percentage change will be added in the statement, and rest of the format, everything is same like a normal financial statement only. And we will start with the previous year amount column followed by current year amount column when it comes to financial statements. That is how we used to prepare. So here we are discussing about common size statements again, and particularly in this question we are going to discuss about common size balance sheet. So first of all, what is common size statements? Okay, unlike the comparative statements, we are not going to compare 2 years value simultaneously and find out how much change has been there, or how much change has taken place in these two years values. That is not what we are going to do in the common size balance sheet or common size statement of profit or loss. Here also we can prepare common size balance sheet or common size statement of profit or loss, but we are preparing it not by comparing the values of two simultaneous years or two simultaneous accounting periods. We are not comparing those two values. Instead of that, what we are going to do in common size statements are, we are going to convert each and every value that is given in the financial statements on the basis of some common value. So there will be a common base value based on which we will be converting all the other values in the financial statement. That is why the name common size statement came. Okay, common size means we are actually converting all the values that are available in the financial statements into on the basis of some common base into a percentage. Okay, into a percentage. So for example, here as you can see, shareholders funds, you can see 12 lakhs is mentioned. This 12 lakh we will compare with a common value, and we will find out this how much this 12 lakh is when it is compared to that common value. So when it comes to common size balance sheet, the common value or common base that you are going to take is the total value. Total of assets or total of liabilities will be the common value based on which we will be converting all the values. Similarly, when it comes to common size statement of profit or loss, we will be converting each and every value which is given in the profit and loss account, or as we call statement of profit or loss, on the basis of revenue from operations. Revenue from operations. Revenue from operations is nothing. This is basically your sales. Okay, or net sales as we can call it. Net sales. So revenue from operations will be the base value when it comes to statement of profit or loss, and when it comes to common size balance sheet, the base value will be the total of assets or total of liabilities, because basically both are same. So we are not basically comparing this current year value with the previous year value in this particular statement. Okay, so that is how it is prepared. So again, to confirm it or to make your doubts clear, let me say, or let me repeat once, that is, common size statements are those statements in which we will be converting each and every value given in that statement into a percentage based on some common value which is there in the same statement itself. So that is how common size balance sheet or common size statement of profit or loss will be prepared. Now we are preparing common size balance sheet in this question. I am not given fully, only one balance sheet is given. So question is actually prepare common size balance sheet, which I didn't mention anywhere here. I have just mentioned the I'm just showing you the balance sheet part alone. Okay. So what same like when you are preparing the comparative statement, this format is like this. First we have to, as it is balance sheet, first we will be drawing like this or writing like this, common size balance sheet as at, same like balance sheet heading only will be writing. So common size balance sheet as at is mentioned, and you have to mention the both the years that is mentioned here. Okay, even the date also, as at 31st March 2017 and 2018. 31st March 2017 and 2018. Like this you have to write the heading. Then columns will be same like normal balance sheet format only. Particulars, note number will be there, and same like our comparative statement. First you will be recording the previous year value, then we will be recording the current year value. So previous year value is 2017. So 31/3/2017. Current year is 31/3/2018. We'll be recording. Excuse me. So after this, we add two more columns. I'm adding like this, percentage to the total, bracket I am writing 2017, percentage to the total 2018, percentage to the total 2017, percentage to the total 2018. You can write there 31/3/2017 also, 31/3/2018 also. I'm just writing like this, percentage to the total. Now what are we going to do here is, we will go to the question and take each amount. So we will write the balance sheet in the same way as it is given here. So first we will be writing equity and liabilities. Under that we will be writing what is given there, shareholders funds. Shareholders funds, no note number and all. We will just copy the amounts like how it is given. So last year's amount was 10 lakhs. Current year amount is 12 lakhs. Percentage to the total means that will fill up. First we will copy all the amounts. Okay. Next amount is current liabilities. Sorry, after that non-current liabilities is there. Non-current liabilities is there. Amount is 6 lakh each. So I'm recording that 6 lakh here. Current liabilities is also there. 7 lakh, 4 lakhs. After this, just as it is given, just showing the total. So here it is 25 lakhs. Sorry, first one it is 20 lakhs. I have recorded the amount wrongly. Here I have recorded this 7 for current year, which was actually previous year amount. Here 7. So here it is 20 lakhs, here it is 25 lakhs. After this we are going to the assets. In that you can see only two, non-current assets and current assets. Non-current asset previous year 12 lakhs, current year 13 lakhs. So 13 lakhs. Similarly, current assets last year 8 lakhs, now 12 lakhs. Total will be 12 plus 8, here also 20 lakhs. Obviously, you know that current assets total will be equal to liabilities total. Now, what are we going to do here is, now we need only these extra two columns. So in shareholders funds, what we are going to do here is, we will just go to 2017's amount column. I'll zoom out a bit. Okay, 2017's amount column. As you can see, shareholders funds is given there 10 lakhs. What we are going to do here is, we will take the total value of that particular year that is given here 20 lakhs, and we will divide each amount by that value and multiply it by 100. So we will convert, basically we are converting it into percentage. So what we are actually doing here is, each value divided by the total of that particular year into 100. So here 10 lakhs divided by 20 lakhs into 100. That is what we are going to do. So we will be getting the answer as 50%. So I am writing like this, no need to mention percentage sign and all here, just have to mention the amount that you are getting there. Next is 6 lakhs. Similarly, same like what we did before, 6 lakh divided by 20 lakhs into 100. 6 lakh divided by 20 lakhs into 100. So you will be getting 30%. Similarly, 4 lakh divided by 20 lakhs into 100. Why we are taking all these 20 lakhs? Because it is common size statement. So there should be a common base based on which you are converting the values. So 4 lakh divided by 20 lakhs into 100. Hope you are getting the concept. So here there is no connection between this amount and the next year's amount. We are not comparing those two, or we are not finding out any difference between any of these amounts. We are only calculating first 1 year first and followed by the next year. These 2 years are not connected in any ways. We can compare the values which you are getting here, but initially we are not comparing these two values or finding out the difference between these 2 years values. So 4 lakh divided by 20 lakhs, 4 lakh divided by 20 lakhs into 100. So you will be getting 20%. And here always it will be 100% only. That means in the total place where you are writing total, will be always 100 only. So here also without calculating itself we can write 100. Here also you can write 100. Next step is, we are going to the next year's value, 12 lakhs divided by 25 lakhs into 100. Same step, same procedure we are doing. 12 lakhs divided by 25 lakhs into 100. You will be getting 12 divided by 25 into 100. 48%. Similarly, when you are doing this, 6 lakh divided by 25 into 100. Again we will be doing, we getting 24%. And the last one, 7 lakh divided by 25 lakhs. Hope you are getting from where I am saying this 7 lakhs, 6 lakhs and all. Okay, all these are current year, that means the year which we are taking, the particular year's values. Okay, so 7 lakh divided by 25 lakhs into 100. You will be getting 28. Okay, so we will be getting here also 100. No need to do anything here, you don't have to add or deduct anything here, you just write 100 there, because 100, that is the base value on which we are doing the calculations. Similarly, we are going down, first 2017's non-current asset value. Non-current asset value was 12 lakhs and the total is 20 lakhs. So obviously we will be getting 60% here. Again 8 lakh divided by 20 lakhs, you will be getting 40%. Okay. If you are finding it difficult, this 100 minus this 60 also you will be getting 40%. Same process only. Instead of doing calculation, you can just remove that 60% from the total. You will be getting the remaining percentage. Okay. And next is 13 lakh divided by 25 lakhs. You will be getting 52 percentage. And next is 12 lakh divided by 25 lakhs. You will be getting 48%. This also, here also you can do like this, 100 minus 52. You will be getting what? 48%. Like this, we have to draw this statement, common size balance sheet, not common size profit and loss account. We will do a particular video on that common size profit and loss account also, okay, or statement of profit or loss also. So this is how we have to prepare the common size balance sheet. Nothing, very easy. You just have to copy the amounts. You just have to rearrange the date columns based like previous year first, followed by current year, then percentage of the total of previous year, percentage to the total of previous year, percentage to the total of current year, and you just have to do the calculations. And percentage, when you are writing, make sure that you are writing at least 2 digits after this particular percentage. Whatever percentage you are getting, at least 2 digits. Even if it is 0 also, try to mention it as 0. No need to write any percentage signs here. And when you are calculating the total value, which is the base value, will be always 100% only. No need to do any calculations there. Okay. Similarly, this one also 100% will be there, and we are converting it on the same values. So if you want to find out any missing amounts here, suppose 20%, instead of calculating, how to find that? It means by, instead of dividing 4 lakh divided by 20 lakhs into 100 to get 20%, how to do it? If you know the remaining 2 percentages, just remove the other 2 percentages from this 100. Whatever is remaining will be the third value. So this is how common size statement of common size balance sheet is prepared. So that's all. I hope the concept of common size balance sheet is clear. Usually in exam, this kind of questions, very direct, straightforward questions won't be there for this upcoming boards and all. We'll be doing dedicated sessions for twisted questions from this. Before that, anyways, you should know what is the base or what is the base calculations that are involved in this statement. That is why I thought like we'll do a video on that today. So that's all for today. All the best for your preparations. Thank you.